Welcome to the Real Estate Daddy podcast, where I like to talk about entrepreneurship, real estate, and current events. My name is Tabitha Richardson, and I'm your host. And today we are talking about part 2 of the How to Start Your Business series. If you haven't seen part 1, just go back and check out episode 7 for the first 7 steps of starting your business. Today we will talk about the other 7 steps to starting your business and a little bonus at the end. So let's jump right into it. Alrighty, so first and foremost, you want to now go and get your DUNS number. And if you're not sure what a DUNS number is, it's basically your credit score for your business. Just like for your personal, how you would do Equifax, TransUnion, and Experian, well, they have the DUNS number for your business. And why is a DUNS number important? Well, you want your business to be able to establish its own business credit so that when it comes time for you to be able to, apply for credit, you want to be able to apply for your own business credit without using your personal credit. Now, the higher your DUNS number is, and the more established business credit you have, then you'll be able to, apply for things like a business loan, real estate, or a car in your business name without using your personal credit. So that debt would show up on your business credit and it would not show up on your personal credit. So it's important to go ahead and register your business. There's no cost for you to register your business and start establishing your DUNS profile. I'll put the link to Dun & Bradstreet so that you can go ahead and check to make sure and see if your business is actually registered or not. And if it's not, go ahead and do that. So the next thing that you want to consider is getting your operating agreement. So your operating agreement basically just talks about the business and establishes some rules for your business. And it's especially important if you have multiple members of your business or multiple owners of your business. Your operating agreement just pretty much lays out everything about the business and who does what. So which members are responsible for doing what, who are the members of the business or the owners of the business, how much ownership interest you have in the business, and how much capital each member has put into the business. If it's just one member, so you're a sole owner, then that's fine too. You can still establish how much money, how much capital you've put in to get the business started. You want to just make sure that you're jotting down all of this information ahead of time, because if you do apply for a certain type of loans, they might ask to see the operating agreement for your business. Another good thing for multiple member businesses is that it also stipulates how you would handle disputes. So if, it's just 2 people in the business and there's a dispute, how would you break that tie if both parties are on different sides of the decision? So you can establish that ahead of time. And also, how would you dissolve the business? So if it's multiple members and one person wants to get out of the business, or you totally want to just dissolve the business, you would already think through how that would happen before. You want to make sure that you have established rules before you have conflict in the business between partners. So an operating agreement is really good to establishing the who does what, who's the owner, how much money we're investing, what is the ownership interest. Maybe it's not a 50-50, maybe it's a 60-40, or, based on how much capital you put in would be how much ownership you have into the company. So there's operating agreements all over the internet that you can download and just change the information so that it applies to your business. All right, the next thing that you want to think about is, where is this business going to be? Is it going to be an online business? Is it going to be a brick and mortar business? Will it be a combination of the two? you want to think about those things because it's very important. If you're going to have a brick and mortar business, then there's going to be more money outlay in terms of getting equipment, furniture, supplies, things like that. And of course, you have to find a location. Are you going to buy the building? Are you going to rent someplace? Are you going to share space with another business until you get ramped up? So you want to think of that. And if it's just going to be online, that's something you have to think of too, because now you need to get a website. You need to think of if there's going to be other people working in this business with you, how will you communicate with them? You will have to establish some rules for your business online. But most importantly, you're going to have a really good online presence, because that's the only way people are going to be able to communicate with you and your business to determine if they're going to patronize your business. So that's something that you really do need to think about, where the location of the business is going to be. Then the next thing you want to think about is, are you going to have employees or independent contractors? Now, these two are very, very different. If you're going to have employees, then that means you're going to be paying them a paycheck. You'll need to run payroll for them, and you need to take out taxes. You'll need to pay the taxes to the IRS and your local state and city government. And then you would need to establish rules for your company, for employees. And if it is an independent contractor business, like for my business in real estate, all of the agents that work for me are independent contractors. So when I pay them, I do not pay them and take out taxes for them. So your independent contractors would be responsible for paying their own taxes. Another important thing about independent contractors is that they have to basically have their business knowledge already. So you're not telling them how to do certain things. Now, there might be some training that needs to happen, but ultimately they kind of know how to do the business. You're not telling them a time that they need to be at work every day. They kind of work on their own and may set their own schedule and just may, provide the work or the results to you. There's very defined laws between employee and independent contractor. So you want to understand the difference between the two, make a determination on if you're going to only have employees or only have independent contractors, or a combination of the two, depending on the role that the person will play. And then make sure that you're not mixing the two, because if you classify a position as an independent contractor and you start treating them like an employee and you're reported, you may have to pay back taxes on everything that you've paid them. So just make sure you have an understanding of the two and decide. Also with an independent contractor, you're paying them as a 1099, and at the end of the year, you're giving them a 1099, and you have not taken out any taxes for them. So the next one is figuring out your accounting software. Now, regardless if you're paying through payroll or you're just cutting a check or doing a wire transfer for an independent contractor, having accounting software to manage your income and expenses and to be able to run financial reports for your business so that you understand how well or not well your business is doing is very important. You want to start tracking your business expenses from the beginning. And if you've opened up your business account, which we talked about in part 1, you want to make sure that you're not commingling your personal and business funds. So you want to track these things separately. So some of the accounting softwares that you can use is QuickBooks. I've always used QuickBooks. There's QuickBooks Online, and then there's also the desktop version of QuickBooks. But what's great about QuickBooks and a lot of other accounting softwares is that you can connect it directly to your bank account, and then you can pull the information from your bank account into your accounting software so that it minimizes some of the work that you need to do to balance your books each month. Some of the other accounting softwares that you can look into to see if it works for you would be FreshBooks, Zoho, HoneyBook, or you can just use Excel, some Excel spreadsheets. You could just create, just a spreadsheet that, you put your income for each month, and then also list out all of your expenses. And then at the end of the year, you can give that spreadsheet to your accountant for them to file your taxes for you. Now, I want to just jump back because I just thought about something. Now, if you are an LLC, S Corp, you do need to pay yourself as the owner, as an employee of the business. So there will be one employee of the business, and you will need to pay yourself on a payroll. You don't have to pay yourself once a month, or once a week, or every other week. You can determine how you want to pay yourself. So if you want to pay yourself quarterly, or however you prefer to pay yourself, that's something that you can decide to do. But make sure the accounting software that you use has the ability to run payroll for you. There is another company that you can use to just do your payroll. They have like ADP, another company called Gusto that you can use, that they will run your payroll for you and calculate all of the taxes and everything that you need to have taken out. And they will deduct that from your account, pay your employees, and also pay the proper agencies that need to get paid for the taxes. So accounting software is really, really important, and make sure that you do your research or talk to your accountant to ask them what do they recommend. I know QuickBooks has the accounting part where your accountant can log in and look at your books, and even a bookkeeper can go in and look at the books each month and do your bookkeeping for you. So it will be easier if you have an accounting software to do that. And there's tons of classes out there to help you with understanding how to use QuickBooks, because it can be a kind of learning curve to understanding how to operate your books. All right, so now let's move on to insurance. Everyone needs insurance. It doesn't matter what you're doing. You always need insurance, and your business is no different. So with your insurance, there's a few different types of insurances that you would want to consider for your business. There's tons of insurance out there. So I would recommend that based on the industry that you are working in, that you just talk to other people in that industry to determine what is the best insurance that you need, because there might be some others out there that I don't list because I'm not in your industry. So talk to your insurance provider as well. So one of them that you most likely would need would be general liability insurance, and that just kind of protects, it's just a general, like kind of a blanket type insurance that you can use. And another one would be workers' compensation. So if you do have an employees, then you might want to get workers' compensation. Talk to your insurance provider to find out how much you need and if you need it. Because if you're the only employee, then maybe you might not need it. But that's something that you should consult with your insurance rep to find out. Next, professional liability insurance. So to protect you as a professional, just talk to your insurance provider and they'll be able to tell you the best ones, because you might not need all insurances. And then an umbrella policy. So an umbrella policy is very inexpensive, but it covers you against liability in terms of someone trying to sue you. So if someone sues your business and then they also try to sue you personally, we do know that if you have an LLC or corporation, that you are separated from your business, but that doesn't stop someone from trying to sue you personally. So an umbrella policy will cover you in the event up to the amount that you request coverage for. But again, talk to your insurance representative. This would be their wheelhouse, and they'll be able to tell you based on your industry and your needs what type of insurance you'll need. All right, so the last one will be the branding. So I left the best for last because people usually try to jump to do this first, but you want to make sure you're getting the important things out of the way before you're jumping into the branding. So the branding is the fun part because that is what people see, right? And it gives your business personality, the colors that you choose for your business and the meaning behind the colors for your business and what they mean to you and what they mean to customers. But so you want to talk to a graphic designer and a web designer, and maybe that person is the same person. But to me, it's better when you have the same person doing all of your branding, because then you have a nice flow to the branding. So you want to choose your colors, what your colors will be, having your logo created for your business, your website done for your business based on your business needs, your collateral. So collateral can be anything from like letterhead. I'm not sure that people really use letterhead like that anymore, but like letterhead and envelopes and just like those paper goods that you would need if you need to write a letter, an official letter for your business on business letterhead. Sometimes people do still request that. You want to think of signage. If you have a location, interior signage, exterior signage outside the building, what that would look like. Decorating your office, the colors of your office and the design of the office. What's the feel of the office? Is it contemporary? Is it, does it have, a more modern feel to it? Is it, open space, just what the feel of your business is, and all of that works together. And then you want to also think about social media templates, because now a lot of marketing is done online and on social media, creating social media templates for your business. So branding is usually the most fun part of starting your business, and I saved that last one for you so that you can just have fun doing that. And then the bonus thing that you should consider is trademarking your business. So the trademark, once you have your logo design, you can trademark the logo as well as the name of the company. You can do those separate together. But that's something that you want to think of. If you're going to build this business out, you want to protect it from other people being able to use that same name. And with the trademarking, usually your trademark is not going to take effect until you actually use it in commerce. But you can start the trademark with the intent to use it as in commerce and then update it later on. But one important thing to know about trademarking is it really is the first person to file the trademark. If you're the first person to file the trademark, if someone else is out there using it, that name, and they would have to prove that, and then there's a whole nother process with that. So although it's the bonus and the last, I do recommend that you do that search before you do any of this. So as part of the beginning process, do your search, see if there's another company using this business. So that is it with starting your business. Part 2 of starting a business. Hopefully you got a lot out of this and you're going to start some amazing, successful businesses. Again, if you did not watch part 1 of this 2-part series, make sure you go back to episode 7 and you watch part 1 of this. If you have any questions, as always, make sure you put it in the comments. Like, subscribe, and share. Share this episode with people that you think would be interested in knowing the steps they need to starting their business. So again, thank you for watching, and I look forward to seeing you on a future episode.